Welcome to the deep dive. Today we're digging into some pretty interesting moves by a major player.
Yeah, the teacher retirement system of Texas, sixth largest in the U.S., right? So what they do matters.
Exactly. We've got this Motley Fool piece from just yesterday, May 8th, laying out their Q1 trades.
And it looks like they've been busy shifting things around.
That's the plan for today. Figure out the why. Why trim back on, the big tech names, Nvidia, Tesla, Apple?
And then pile into a pharma company, Eli Lilly. It's quite a switch.
So let's start there. What exactly did they sell off? What were the numbers?
Okay, so the article says they cut Apple by 12%.
12%, okay.
Nvidia down 9%. And Tesla, they reduced by 8%.
For a fund that size, those aren't small tweaks. That's a definite rethink.
Definitely. And on the flip side,
They boosted Eli Lilly by 11%. Big swing.
it really is. So let's unpack the tech side first. Why move away from Nvidia, for instance? The AI angle seems key here.
Yeah, the article brought up this company, DeepSeek, a Chinese firm.
Right. They apparently built a chatbot that rivals ChatGPT, but, and this is the interesting part, uses fewer resources.
So the implication is what? That the AI gold rush might cool off or
Yeah.
change?
Well, it can raise questions, about the sheer amount of capital being poured into AI infrastructure right now.
If someone can do it cheaper,
Yeah.
essentially.
Sort of. Or if the technology evolves rapidly towards greater efficiency, does that impact the long-term return on these massive hardware investments? Is something a big fund might be considering.
Okay, that makes sense. A potential efficiency shift. What about Tesla? The article mentioned a couple of things there.
Yeah, demand was one point, reports of it falling globally.
And the other thing was Elon Musk's political side project, DOGE, Department of Government Efficiency.
Right. And the potential question for an investor is, does that increase political focus? Maybe distract from the core business.
Especially when Tesla's valuation is so high, right? It relies heavily on executing perfectly on future stuff.
It's exactly. Autonomous driving, robotics.
Yeah.
All that needs laser focus. Any perception of diverted attention could be seen as a risk.
Okay, so NVIDIA, potential efficiency shifts, Tesla, maybe execution risk and demand. What about Apple? Their stock actually fell the least in Q1.
True. With Apple, the concern highlighted seems more geopolitical.
The manufacturing footprint.
Yeah, being so heavily reliant on China and also Vietnam, there's always that background noise about trade relations, tariffs.
Even with that temporary exemption on consumer electronics from China.
Well, yeah, that exemption itself came out of the Trump administration policies, and the article notes the uncertainty around whether tariffs might come back or change. It's a layer of risk.
So maybe just managing that global supply chain exposure.
Could be part of a wider risk management strategy for a fund like TRS, yeah. Okay, so they're dialing back tech exposure a bit.
Let's talk about where the money went. Eli Lilly. Why them? I mean, their stock chart is pretty incredible.
It really is. Up 395% over the last 5 years as of May 6th. That's rivaling, some top tech and AI performers.
Which is kind of amazing for a pharmaceutical company, even a big one. They've been around forever, right? First to commercialize insulin back in the 50s.
That's them, founded in 1951. But the recent excitement, it's really centered on these GLP-1 drugs.
Okay, GLP-1. Remind us what that is.
Sure. Glucagon-like peptide-1. Basically, these drugs mimic a hormone that helps regulate blood sugar, but it also affects appetite.
So that leads to their big sellers, Mounjaro.
Yep, for type 2 diabetes management. Revenue up 113% year over year in Q1 2025. Just huge growth.
Wow. And the other one, Zepbound.
That's for weight management appetite control.
Oh.
Its sales growth was even more staggering, up 347% year over year.
347%. That's just massive demand.
Absolutely. It shows they've hit a real nerve in the market with these treatments.
And it's not just these two. They have more coming.
Seems like it. The article mentions progress elsewhere, approvals in oncology, immunology, plus good results in later stage trials for more diabetes and obesity drugs.
So the pipeline looks strong.
Yeah, and they're backing it up too. Investing heavily in manufacturing, building 4 new facilities.
Gearing up for more production, basically.
Clearly anticipating sustained demand, and financially. They seem solid. reaffirmed their full-year revenue guidance,
Which was?
$58 billion to $61 billion,
Yeah.
and expecting a pretty healthy performance margin between 40.5 and 42.5%.
Okay, so you have strong current drugs, a good pipeline, they're investing in capacity, and the financials look solid.
Exactly. You could see the appeal, can't you? It offers that growth story, but maybe with a different risk profile compared to, say, the tech stocks they trimmed.
It fits that classic diversification idea, right? Spreading bets across sectors.
Pretty much, finding growth in different areas of the economy. Eli Lilly looks like a stable, large-cap pharma that's somehow delivering tech-like returns right now.
So, wrapping this all up, the big picture here is this major pension fund
The Texas Teachers Fund, yeah.
making a clear pivot in Q1, less weighting towards some top tech names.
Apple, Nvidia, Tesla, likely due to a mix of concerns, AI evolution, specific company challenges for Tesla, geopolitical risks for Apple,
And shifting that capital quite significantly towards Eli Lilly.
driven by the massive success of their GLP-1 drugs, Mounjaro and Zepbound, plus a promising pipeline and investment in future production.
Is a fascinating move. Shows how even huge funds react to shifting landscapes.
Definitely. Which leads to maybe a final thought for you listening.
Yeah.
How do these big economic currents, these sector-specific stories, influence where the really big money flows?
And maybe what can you, as an individual investor, take away from seeing these large-scale adjustments? Not necessarily to copy them, but
Well, maybe to think about your own portfolio, your own risk assessment in light of these broader trends.
definitely something to mull over as you look at your own strategies. Thanks for exploring this deep dive with us.